Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the last day here in January. It's the 31st. It's 2023. We got a lot coming up this week. I think Thursday is going to be a big day, but before we get to Thursday, we have the Federal Reserve, and the Federal Reserve takes place on Wednesday. So a lot going on just as we start this week, as we end January, and we begin February. So let's get right to it. As we update the market, the strongest index of our four is right here. It's the Russell RTY. That's up 2.4% in today's session. And the others were left, I say, in the dust, but up only 1%. The bulk of the activity in today's session came at the close. Let's see that 1 minute chart. There's your opening print of the S&P. And in the NASDAQ, similar. We'll focus on the S&P. Mostly range morning turn trend and a surge to the upside right back, in my trading logic, to the top of the volume profile, but more importantly, back to the top of 4,100. NASDAQ also got that reversal to the upside. Dow mini futures right back where the S&P is, and the Russell is the strongest, not just back to the top of the value area extreme. That's about 19 and 27. But closing above it, 1940. That's the strength in today's session. Looking at the Market Watch tab, strength was there across the board. Where were the leadership in today's session? General Motors, FedEx, Ford, that's two motor companies. Tesla, we'll count that as three. UPS, right there with FedEx. And then some financial names, which include Capital One Financial, but some retail, Home Depot and Lowe's. So there was buying pressure. There's Amazon, big market cap leader, and others. Big market cap buying across the board. Not a lot of weakness in today's tape. In fact, there were a few names, one of which is Caterpillar. Caterpillar down 3% today on earnings. Charter, McDonald's down on earnings as well. But the other stocks that had their earnings in terms of big movement, General Motors up 8%. There's Caterpillar down 3%. UPS, 5% to the upside, and ExxonMobil, 2%. We have earnings after the bell, but we'll focus on our time in the video today, not so much on Mondelez and Amgen, but on the stocks that have earnings coming up. Tomorrow, before the bell, we'll actually do this larger so we can see it a little bit clearer. And in the week ahead, let's first talk about earnings. We will be having T-Mobile, Thermo Fisher, and Altria will occur before the bell on Wednesday. After the bell and after the Fed will do their announcement and their policy. It's expected to be a rate hike or rate increase of 25 basis points, down from the 75 and then down from the recent 50 hikes, now to 25. That's 0.25 or 25 basis point hike. But we'll get to that after the earnings discussion. Meta or Facebook will be announcing earnings after the bell on Wednesday, and then MetLife will do so as well. And others of 5 or so stocks before the bell, ConocoPhillips, Merck, Honeywell, Bristol Myers Squibb, and Eli Lilly. But look at what's happening after the bell on the next trading session on Thursday. In fact, let's get this started. Where do you want to look? Starbucks, this is in no particular order, but they do have their earnings on Thursday. So we'll put it that way. Thursday earnings, and these are our Wednesday earnings. These are Thursday earnings as well. That's before the bell. So at the open, and then after, and the ones coming up in tomorrow's session. So I want to focus on these right here, because they can be enormous market movers. So we think the Fed is going to be a big mover. We do think the Fed will be a big mover, but we think that these could be a little more impactful, or at least add additional volatility and movement to the equity futures and leading sectors. Apple, Amazon, Qualcomm, and Google. They'll be reporting earnings after the bell on Thursday. So we'll keep you updated throughout the trading session and our videos on Wednesday. But for now, just know they're coming up. And how to look at the expected move logic on those stocks. Of course, take a look at the near-term expiration on the options. We'll start this with the S&P. In fact, let's do that with Meta. It has a 150% implied volatility. Stock trades currently about 150 per share. that implied volatility move is around $16 up or down. And you would do that for each of those stocks as we come to the earnings on those. Of course, butterflies, you have trades on spreads, or if you want to wait until after the earnings, that might be a better idea, because your stock that you have a position on could beat and could rally, but the next session could be turned right around with some big numbers in the other direction of something larger than it. There's always a bigger fish out there, always a bigger stock, except for Apple. That's the biggest one. It reports on Thursday. So getting outside of that focus for the moment, let's look at our calendar. And by the way, here's the Russell that was green across the board. The NASDAQ had strength all across the board as well. And of course, the S&P 100 did as well. To our calendar, and I just want to highlight just as quickly as possible, Fed Wednesday, that's your Fed day, and earnings in play as well. And the big ones are here. So Fed and earn, Wednesday the Fed. We are expecting, at least as seen here, and what we like to show in our TheoTrade video updates, and some of our broadcast sessions, it's the CME Fed Watch tool. And the Fed Watch tool, a quick note about it, CME Group, Fed Watch tool. The expectation is for a raise in the Fed funds rate from 4.25 to 4.5. In fact, that's our range, 4.25, 4.5. They'll be raising it by 25 basis points. We'll keep it simple. If there is any surprises or deviation from that, we'll see the market move, but that's what the market is expecting. And maybe part of that end of day rally had a little bit to do with that. So earnings and Fed are in play. Outside of all of that, quick look at crude oil, puts it back at that pivot point. And I'm watching this on this chart about 82 with an ongoing downtrend in crude prices in the bond market. These are the levels that I have in the watch pivot points, or at least the price points for trade strategies, and they will be across the board. So I'll give you the dominant, or at least the best probability play. Would be down away from these levels if the S&P, we'll say scenario 1, and how the train of the inflation, pain train, or at least the inflation goes, S&P, if it trades to the downside, of course, other equity futures will turn down from their overhead resistance. That could be an expectation of crude oil taking another sell-side activity. And the bond market, in that scenario, would also likely go to the downside. From TLT, that takes it from 108, perhaps all the way back to 100 or even lower. And the futures contracts are already coming down from their overhead resistance. That's a sell-side activity or sell-side put or bear position. And if we see that happen, the yield in the 10-year Treasury rate should be trading the upside. That's the, call it the bull scenario, stock market bear scenario, bond yield bull. That's scenario 1. That's your trend continuity scenario. But we have to be very alert and very aware with positions and spreads and anything on the put side. That's going to be okay because the risk is controlled with your options and your purchase prices. However, if you are short shares, short ETFs, or net short stock and you don't have stops on, that could be a severe risk to your portfolio and your trading account in the event the opposite takes place. And that I'll define as this time it's different. We did not, we'll pull it back further to see what I mean by that. We've had the bear market continue. We'll pull this back a little bit to the beginning of the prior year. And we'll focus on the downtrend in motion and how that's played out through 2022. Each time we've come to a major turning point in the market, the next move, I call this the risk reversal, has been the downside. This will be a continuation. We'll call that continuation scenario. Otherwise, we'll call this time is different. And that would be a break to the upside. We'll finish the video as all the things go through this week with this in mind. If this time is different, the S&P risk breakout is above 4150 and eventually 4200 in the index. The NASDAQ breakout resistance point, risk reversal, is about 12,005. I'd say 12,006 to be a little more safe. The Dow is already close to it. And the Russell is there just under the 2,000. For crude, in the event that we break, that will be a risk reversal and a breakout higher and trend move to the upside above 83. And the bond market would probably, again, we're putting the pieces together, break to the upside above 110 per share up to 115, throwing that to the bond futures. That will break above this resistance and ZB similarly, and we'll end where we started talking about the yield. That would be a down move in the yield. We don't know the future, but we know our positions, we know the risk, we know the probabilities, and this time could be different. Fed is up, earnings are up. As always, be careful, safe. This is Corey Rosen with tonight's Theo video update for January 31st, 2023.